Hi traders, it's Roberto once again, and this is actually a follow-up video on the London close slash interest rate trade setups for binary options. And I wanted to talk about the New Zealand dollar because the rollover rate, for those of you that understand the swap, the rollover rate that is paid on interest for holding positions on a currency, the New Zealand dollar interest rate is very high. So it's almost like you're getting two confirmations for taking a trade at the London close. And let me explain what I mean. Okay, now here is a trade setup. This is May 29th. Market pretty much sold off from the beginning of the European session through the New York session. This is the London close. Now, if you're holding a short on New Zealand dollar, you end up paying on the rollover rate, on the interest rate. But if you're holding a long position, then you actually get paid. So not only is the London close a retracement strategy, but it's also a trade for long positions so you can get paid on the interest. So it's like a motivation. You want to take a trade around 1, 2 o'clock in the afternoon, New Zealand dollar. Most likely, there's huge, high probability that you will make money on this trade if you're using binary options, or even if you're just trading Forex. Look at the substantial move from 12 o'clock all the way up to 5 o'clock Eastern. That's like 40 pip move. So if you're just trading Forex, look how much money you would have made. Binary options, stochastic silver sold. This is a 1 hour chart. The entry would have been here. So the moves on New Zealand dollar are so exaggerated, a lot more than Euro USD. So I would definitely include New Zealand dollar in your arsenal when you're trading London close. Here again, here's another trade. Market sold off New Zealand dollar. Here's the London close, and look at that huge move, 40 pips, 41 pips from the London close all the way up to 2100 hours. Now, Fridays are difficult to trade. If you notice, on Friday, the market, here's the London close, but what happened around 5 p.m.? It sold off. And the same thing happened on last Friday, that was yesterday. You see that huge, let me just make this a little bit bigger. A little bit too big. Not much on Friday. Euro, New Zealand, I was rather flat, but this is the London close. And remember, last video I mentioned that if you're going to do a London close trade on Fridays, the expiry date needs to be at 4 p.m. because look what happened at 5 p.m. It just turned around and shot right back down. But still, the market did rally from the London close all the way up to 4 p.m. Eastern. Okay. Now look at this exaggerated move. This is 2100 hour. This is 5 p.m. Eastern. Market sold off a bit at 4 p.m. and look what happened. It just shot up. So that interest rate, very important, holding longs in New Zealand dollar. You get paid on the rollover. And let's look if there are any other trades. Here the market was flat on Wednesday, but at around 1600 hour the market rallied and closed higher by 5 p.m. Eastern. Now these are the trades that are high probability. As I mentioned, New Zealand dollar sells off. By 1600 hours, the market found support, and it could only go up between the London close trade retracement strategy and the rollover rate, where the market on New Zealand dollar markets go up. There's a nice trade and went up about 40 pips. Okay. Now, this is when you have to be careful about taking a rollover if you're interested in buying just to capture that rollover rate. The market had been going up on this particular day, so there's not a lot of buyers up here. Everyone's pretty much holding positions and then exiting at 5 p.m. You capture that. Here's the London close, and this trade I would just trade the London close and not be concerned about the interest rate trade. So the market rallied. Here's the London close, and you would exit. I would have probably exited at 4 p.m. on New Zealand dollar and not 5 p.m. because you don't know if the market's going to just shoot back up. But pretty much market was completely overbought by the London close. All you needed was to put in maybe 1 or 2 hour expiry date. Doesn't have to be 5 p.m. It could be 4 p.m. You would have been profit on that trade. And again, just like I mentioned in my last video, these are the trades that I am reluctant to take. The market's here this particular day, pretty flat, not much activity, and it did rally for the rollover rate before 5 p.m. But then again, I would trade this off the smaller time frame, maybe a 15-minute. Make sure stochastics is oversold. But generally, I stay away from markets that are flat. And again, here's a nice trade setup in New Zealand dollar. Market had been selling off throughout the London, New York session. Here is the London close. And markets just rallied 23 pips all the way up to 5 p.m. Eastern. So that's it. If you have any questions, again, go to my website, fxnorthwest.com. I'm pretty good about getting back to everyone. Just email me any questions, any concerns about your trading, any questions about binary options. Very exciting. So have a good weekend. See you guys next week.